Over here in the middle, you'll see the top gainers and the top losers. So those are always sort of helpful to know. Usually, hopefully, pray that you don't see the top losers and one of your holdings in it. News section, you'll see a lot of different news. I'll just give you an idea of what's going on in the markets. That's always good to know, right? Also, take a look at insider trading, just people within companies, public companies that are buying or selling. Hey, what's up, everybody? So today I am trading live again. Okay, so it is a Thursday morning, US market time, and looks like the markets are slightly red. So everything is sort of mixed, as it says over here. The federal minutes have prompted a sell-off yesterday, so everything was sort of in red. But in this video today, I'm going to be talking about how to use Finviz. Okay, so Finviz.com and YahooFinance.com are two tools that I typically use quite a bit. And just to get started, right off the bat, what I love about Finviz is very, very clean. Besides some of the ads that you'll see that pop up, and understandably, because they have to make money somehow, but they have a lot of information that's really, really helpful. So taking a look right here on the right side, you're gonna see this map that just shows you all the main companies, the big companies in that specific sector. So for example, in technology, you'll see Microsoft, Apple, Intel, Nvidia. You'll basically have a very overview idea of how different large companies are doing. In communications, you see Google, Facebook, Verizon, AT&T, Disney, and consumer cyclical. You'll see Amazon, Tesla, HD, and so on and so forth. Home Depot, and then you have healthcare, financial, consumer defense, real estate, energy, utilities, industrials, and all that. Okay, so right now it just gives me a good idea. I'm taking a look really at like Tesla. I'm seeing if perhaps this might be a good entry into selling puts. I'm looking at Google because Google is one of my largest holdings, Facebook as well. And so, yeah, it looks like they're doing sort of okay. Right now, financial market industry is going pretty sideways, but at least it's not as much in the red as the rest of the market. Okay, so over here in the middle, you'll see the top gainers and the top losers. So those are always sort of helpful to know. Usually, hopefully, pray that you don't see the top losers and one of your holdings in it. But nonetheless, it's good to know if you see something drop significantly. Okay, so that's some of the overview. Taking a quick look at, so typically you can also look at, of course, stocks. So let's take a look at Google. And what I like to use is generally I just like to take a quick look at the P ratio of every stock. It's sort of like a screener. You can set, you can customize it to what you actually want to screen, but typically I just take a quick look at some of the fundamentals like the P ratio, the 4 PE, the RSI. So right now it looks like more people are selling off Google, so that's why I think it's a great time to get in. I don't know why, because Google's trading at a relatively low P ratio for a company of that caliber. So yeah, and then of course you can register for accounts. I typically don't. Um, Let me see what else I can show you. So over here in the news section, you'll see a lot of different news. I'll just give you an idea of what's going on in the markets. That's always good to know, right? And it also has very specific companies that kind of pop up. You can also read blogs. So there's a lot of things you can read about in the news section. Over here is where you can actually screen out different stocks. Okay, so you can sort it by market cap. Okay, if you're looking for a specific size of of a company, You can sort by sector. Okay, so kind of like what the maps was showing earlier. You can sort by dividend. If I use the screener, I typically take a look at some of the fundamentals like the price to earnings ratio. I'll look at the earnings per share growth in the next 5 years, just kind of seeing how they're growing. I'll take a look at any insider interactions to see if people are buying within the company, the price to sales ratio, anything that would help me identify, okay, if this company is doing well, if it's healthy, and if it's something that I want to gain exposure into. Okay, so and then yes, you can also take a look at some of the moving averages. I typically don't do that as much here. I just do it in Yahoo Finance. And then there's the RSI as well. So you can sort it by all these fundamentals, and if you start choosing different things, then you'll get a new list, and you'll get a nice list of stocks that meet your criteria. Okay, so that's something else that you can try out. So over here, I don't really use that as much. Let's see. Okay, I don't actually. I do have an account, but I don't typically log in. So yeah, you can also take a look at insider trading. Just people within companies, public companies that are buying or selling. So a lot of these people up front are exercising their option. Over here, this person is the 10% owner of the company. He bought into wow, he bought quite a few shares. So it's interesting to take a look. If you ever see companies, see executives and CEOs within the company buying, then it's always good to just pay attention to that. Okay, so yeah, those are all great. It looks like the market's up. Okay, so as we're talking, perhaps if we continue to talk more, then the market is going to continue to go up. I'm just kidding. So taking a look at some of the stocks in my watch list. Okay, so we're gonna take a look at Google. So Google is back up. Only 1%. It was down about almost 5% yesterday, so that's fine. Shopify continues to go down. Palantir continues to go down. So right now, these two stocks are great stocks to really gain exposure into. SoFi is down quite a bit, down to $13.59. I haven't seen it that low in a long time. Tesla is also down. So quite a few stocks are down. Ford, Baba, and Disney are actually up. Okay, so that is pretty cool. Facebook is up about 3.6%. So there's a lot of definitely mixed feelings about what's going on in the market. And the good thing is the market hasn't moved a whole bunch. But on the flip side, like a couple stocks in my portfolio are definitely kind of in the red, so like SoFi and Palantir, but that's okay. I think the thing that I've learned really in the last couple of years about investing is it really takes patience. It really takes a level of mental fortitude, and still to this day, it doesn't feel good to lose a couple G's. By a couple G's, I mean a couple $1,000, per day. For me, just growing up working really really hard, on an hourly basis, $1,000 is still a lot to me. And so yeah, so that's pretty much all I have for today. I typically don't do a whole lot of trades because I'm more vested into long term, and I've already really kind of just really maxed out most of my portfolio. I do have a lot of margin available. I do have some available in Robinhood. Robinhood's sort of my play account, and then Interactive Brokers is my main account. What I would say today in this video, and as I always want to kind of introduce in most videos, is if you haven't started using Interactive Brokers, just check it out. Right, I don't want to pressure you, but Interactive Brokers really is a great brokerage. They're a little more complex. They take a little harder. They take a little longer to learn, but you can do so much with it. Especially with you can trade overseas stocks, which I've started doing in the last year. Bought a lot of stocks in Hong Kong. They've been doing great. The main benefit I see is you can use margin. So you can basically borrow off of your positions at 1.59%. That's really how a lot of wealthy people are investing in. You basically, instead of just like paying off your credit card straight up, you can borrow actually off of your positions at 1.59% or less. If you have more money, you can borrow at even a smaller rate, and you just continue to just spend money using your borrowed money from your portfolio. Now, that may not sound like a great idea if you're not really good with managing money, but if you are fairly conservative and you're able to manage your money, you're not really overspending or spending beyond your means, then that is definitely a good idea just because of inflation, right? Inflation hit almost 7%, possibly even more. But given that if you're spending and utilizing a margin at 1.59%, then you're getting a pretty good deal off of whatever you spend. Okay, so that's all I got for you guys today. I don't know exactly what I'm going to be trading yet. I'll probably just real quick. I'll probably be looking to increasing my exposure in Palantir, and maybe perhaps SoFi, and then probably just selling some spreads on Google and Shopify. That's pretty much it, honestly. Just because I typically don't want to, I don't want to just overextend my portfolio. I just want to focus on a couple stocks that I'm really, really bullish on. That's something that I learned after my first year. My first year, I just bought all the stocks that I thought would go up. And this year I am definitely cutting down and just focusing on just a few companies that I really, really believe in, that I wouldn't mind holding for a very, very long term. Okay, I hope you guys enjoyed this video. If you like this content, make sure you smash that like button, just for the YouTube algorithm, just to help get the word out on some of these things. I would really, really appreciate it. Comment below if you have any questions. We're giving out a free shirt to anyone who would want to share their ideas, and if we like it, we'll send you a free shirt. And so, definitely subscribe if you haven't already. But until next time, guys, I will see you around in the next video. With every star, we